On CSB Bank, quarter one was weak for the company. The highest decline we saw in the net interest income and asset quality also deteriorated. However, the slippages declined in quarter one. How is quarter two shaping up? What's the outlook for the remainder of the year? We have Mr. Mondal, the MD and CEO of CSB Bank, who joins us on the show. Hi, Mr. Mondal. Good morning and thanks a lot for joining in. Well, let's get a couple of aspects out of the way. What is the growth you're penciling in for the year? And tell us what went wrong in the last quarter. The retail loan segment, I see, there's a decline of close to around 12%. Why is that?
Good morning, Nigel, and good morning to all your viewers. Yes, we had a slightly soft quarter last year, last quarter. But going ahead, I think this year we are on track in terms of what we wanted to achieve for the full year. Last quarter, we had two challenges. One is we had some regulatory kind of reasons for some NIM compression last quarter because of the because of the some of the income we are having on the interest side that came down because of some regulatory reasons, penal interest as they call it. So that we didn't convert into penal income at this point of time. That will do from next quarter onwards. But this last quarter was to that extent a little soft. The other reason was that we are correcting some of our wholesale portfolio because our new team has joined. And that is where we are exiting some of the older relationships, not because they were any bad or anything like that, but because of the segments which we are going to focus on with the new wholesale team will be different to what we had been doing in past. So given that perspective, we are reorienting our strategy on the wholesale side. That's why we had a little bit of a softer growth on the wholesale. Also, some of our DA book, which was
okay, all right.
Well, on retail as well as on the wholesale side. So that's the reason we had a little bit of a soft quarter.
Okay, all right. So there were some, various factors at play. That's why quarter one was soft. Mr. Mondal, for the remainder of this year, what kind of a growth are we looking at? Point number one. And also margins did see some kind of compression in the quarter one for the reasons that you just mentioned. From here on, what is the range? I think in the past you've hinted at a number of around 4.5% to 5%. What should it look like?
So, Nigel, we have hinted around 4.5% to 4.8% in past on our NIM. We are on track to achieve that for the full year. Last quarter, we went below 4.5% for the reason which I told. On the growth, we do have ambitious plans. So we will be faster than the system by at least 30%. And that, what we have said, will continue. So we will see a growth somewhere between 18% to 20% on the asset side going ahead for the full year. And this quarter itself will turn it around in most of the ratios and parameters, because what we had in quarter one was really a one-off because of some specific issues, which has been corrected now.
Mr. Mondal, hi, morning. So let's talk about gold a little bit, right? Gold prices are up and up. If you believe some targets, it's headed to $3,000, higher, according to a few. What can it do? I mean, if we are going to see a bit of a structural kind of move higher, quarter after quarter, what can it do for your gold lending business? Certainly good news.
Yes, I think the international gold prices are higher for obvious reasons because of the overall Fed commentary and other reasons. However, there had been tax reasons that rates came down in India because of the recent budget announcements. But that has been offset by the international gold prices. So to that extent, overall, I think it is at the similar kind of a level where it was prior to the budget announcements. So given that, I think in India, it has not made too much of a difference, and hence our LTV and everything has remained the similar kind of a levels where we were before. Going ahead, as we see Fed interest rates coming down and things like that, we see bullishness on the gold loan business as well as gold prices. And we are fairly bullish that we'll continue to do well on that business. It's good news for everybody, for consumers, as well as for the banks at this point of time.
What's the sensitivity to your business? I mean, is there a sensitivity? I mean, can you numerically for gold prices and what it does to your sort of lending?
See, gold prices, you know that generally the LTV is around 75% as per regulatory norms as well. So to that extent, the risk related, we always have a 25% buffer plus the making charges and some other emotional quotient which is there with the ornaments. So given that, I think A 10% drop won't make any difference to anybody at this point of time from a risk perspective. However, as it goes up, we are of course cautious because we know that what goes up can come down as well. So we manage our LTV accordingly. And these are short tenor businesses. So in a short tenor, you don't expect because each of the tenor of these loans are anywhere between 6 months to 1 year, you do not expect too much of volatility in the prices at this point of time. So to that extent, we have been running this business for so long with sensitivity analysis, so we know how to run this business. So we don't see too much of an issue. But it's a good thing for us right now at this point of time because gold prices are going up, and hence we can look at expanding our business further.
Okay, got it, Mr. Mondal. I guess just going back to the point on margin. So you're saying, I think that what you're referring to is the change in regulations with respect to penal interest. And, you know, when the RBI was batting for borrowers saying that whatever is the penalty, it cannot be sort of counted as part of the interest and as part of the loan. But you're saying that's been rectified. So you're back on track to deliver 4.5% margin for the full year. Let's talk about asset quality as well, because in the first quarter, there's been some deterioration. We'll just get the numbers up on the screen as well. Your gross NPA is now moving up to almost 1.7%. So that's one concern. We'll have the GNPA numbers in just a bit. Yeah. So that's one concern. The other concern, sir, is going to be on deposit mobilization and CASA, because your CASA ratio is falling very rapidly. Now it's below 25%. It used to be around 30% a year ago. It used to be, I think, 27% just a quarter ago. So let's start with asset quality and then tell us what you're doing with respect to CASA.
Sure. So as you can see that our slippages have already started getting under control. And as we look forward, without making a forward-looking kind of announcement, our slippages are looking under control at this point of time. And we hope that will remain for the whole year. So we had one-off kind of a thing for the last 1 or 2 quarters, and that has been corrected. So to that extent, we don't see further increase in slippages at all. If at all, it will start coming down now. And to that extent, there will be lesser or no impact on the GNP and NNPA side. And we expect it to marginally come down as well from the current levels in the full year basis. Coming to the deposit, I think, and CASA, I think that's a systemic issue. There are structural reasons why deposit accretion and ability to utilize the deposit to our asset growth has a challenge, because there are so many parameters we have to look at: CD ratio, LCR, so many other things. And to that extent, I think CASA ratio is another important thing, and SFR, all these things are important. But from a CASA franchise, I think overall systemic, there has been a compression of 4 to 5%. Our situation is also similar. We originally had a lower CASA ratio. So that is, we are following the systemic compression at this point of time. But
just give us a number, sir, if you can. Sir, I'm a little sorry, apologies over there, just because we're running short on time. If you could guide for some sort of a range or a number, CASA by end of the year, and a GNPA level that you're comfortable with, where you want to be by 31st March.
Yeah, I'll say that. But quickly, the more important thing on deposit franchise is LCR and CD ratio, on which both we are very, very comfortable. LCR is 117, 118%, and CD ratio is between 82 to 85%. We are one of the better placed private banks in the system. Coming to the specific question on GNP and NPA, we will be better than currently what it is, and hopefully will be somewhere between 1.5 to 1.6 on the GNPA side. And NNPA will be somewhere around close to maybe lesser than 50 basis points. So that's the way we are targeting for the full year basis. Quarter to quarter, we'll see how it plans out. On the CASA, I think we'll be somewhere below 25% at this point of time. But as I said, that we are not focusing so much of CASA because we are building our CASA franchise. We are looking at other parameters on deposit and funding franchise, where we are probably better than many other private sector banks in the system.
All right, Mr. Mondal, thank you very much for joining us. It's a pleasure. Appreciate you sort of coming on and talking to us and sharing what you make of things. You know,